Weekly digest of the biggest market stories from the past week. Join host Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name is Serin, and I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for yet another market recap on Friday, August 26th. I'm, of course, joined by my wonderful co-host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, glad to be here, Anna.
Absolutely. We're approaching the end of summer, but the weather is still great. I think it's quite hot where you are, isn't it?
It's been great. Yeah, it's really nice here right now. No forest fires, which is nice. And no COVID.
Something to be happy about.
We just don't have to quarantine.
That's right. And something to be happy about. I know you're having a bit of a rough day because the markets are not treating us very well. So we will get into that. We're going to talk today about the big anticipated Powell discussion that happened in Jackson Hole. It actually happened today. So you're going to tell us what happened there. Some harsh words were used. And then we're going to talk about how the market reacted, which I don't think has been very well. We're going to get into some cannabis news again. We're going to talk about cannabis again. Cannabis sector seems to be doing pretty well and it's heating up. We're going to talk about that. And of course, we're going to get into some CSE issuer news. So look, Jerome Powell is in Jackson Hole. We talked about this last week. He did his speech today. I just wanted to bring up a few things that he said, and then you can tell us actually the whole story. He said we're going to have to continue to feel some pain, and that the Fed will continue to use our tools forcefully. These are harsh words. So what happened?
Yeah, I mean, as we mentioned last week, we were anticipating that, this meeting of all the central bankers in Jackson Hole happens every year. And, it's not an official Fed meeting. He's just presenting at this symposium that they get together for. But everyone was anticipating exactly what he would say and how he would say it. And, the nuances of every single word that he uses are right there and examined. And so Monday, markets sold off in anticipation that, the probability that the next meeting in September, the Fed was going to go to a 75 basis point increase. And then as the week went on, people were like, no, it's actually only going to be 50. And so we've seen a rally up until this morning. And then he spoke this morning at 10 o'clock Eastern time and only spoke for, I think it was 8 minutes. And then, which was actually one of the longer speeches for a Fed governor at Jackson Hole. And the market initially went up and then it sold off aggressively, and it's been down most of the day. And it's concerned about exactly what you said, that they're going to continue to tighten. They're going to continue to hike interest rates. They will be data dependent, but that we need to have some pain. And there was a lot of people during the week that were talking about the fact that with the market continuing to rise, that pain wasn't being felt in the financial markets the way that you would anticipate that needed to be. That's going to be something that comes out over time for sure. Because we can have a market that goes up and yet the economy, is rough. So it'll be interesting to see where it all shakes out over time.
Okay, well, so I was going to ask you this because I'm surprised that the market sold off as harshly as they did, because aren't we all anticipating that that's exactly what he was going to say? Is this really shocking information to the market?
I think it's just the tone of his language because in a lot of cases, especially when he goes into the question and answer period, he often tries to kind of backpedal. So his initial remarks, he typically has come out and is quite hawkish, as they call it, and then when the questions come, he becomes a little bit more dovish, and the market doesn't get too spooked. Well, leading into this, most of the bank governors for their individual regions had spoke, and they were all very hawkish. They were talking about the fact that, the Fed had to really keep being aggressive. So you kind of thought, maybe that's built into it to a certain degree. And then when the market rallied this week, you really thought, okay, I guess it has been built in. Some of the commentary that I read, people were basically looking at the market saying like, oh man, like we got a bunch of fools in the market because, we know the bank's going to be aggressive and yet the market's going up. So what's going to happen when Powell speaks? And lo and behold, they're all doing victory laps today. So it's quite interesting. One thing that, I did want to bring up was I saw a commentary today where they went back and looked at his speech from a year ago. And that's where he was really talking about all of these inflationary pressures in the economy being transitory, so that they were just going to come in for a little while and they'd be gone soon, and that the Fed didn't really need to do anything about it. So it just also shows you how radically wrong the Fed can be, even with all the data that they have.
So nobody has a crystal ball. And I would imagine too, some of the things he says is also to help, maybe last year he needed to keep things at bay. So he was maybe being nicer than he might have felt on the inside. One thing that I thought was interesting is this is the highest level of inflation we've had for 40 years. I'm not going to disclose my age. But I mean, let's be honest, we're dealing with, an economy of people that haven't really experienced this type of inflation before. So do you think that will add extra pain because people haven't gone through this really before in their experience in kind of the markets?
Well, that's certainly one commentary or one belief, that because a lot of us have only been able to read it in history books, and we didn't feel it because we're just so young.
We're so young.
That we totally didn't even know that existed. that it'll last longer than we anticipate, and that's the sort of, in the back of the market and investors' minds, that's the thing that really weighs on the most, is that once this inflationary train starts to move, it's like a super tanker. It doesn't just immediately stop and turn and go the other way. But as an investor, as a consumer, we have a mindset now of higher inflation. And what does that mean? Because it still eats into purchasing power. It still has enormous economic ramifications. But if we're all anticipating higher inflation, we're starting to sort of get used to it, then it becomes that much more difficult to fight, because if people are still spending money and prices are still going up and businesses are still passing that on and consumers are still paying it, then that keeps the ball going, and it gets harder for the central bank to do what they need to do. And it, as we saw in the 80s, the interest rates went well into the double digits. Will they have to go there this time? Well, we certainly hope they don't, but it would cause a lot of pain for sure if they did. And that's in the back of everyone's mind. That's what they're thinking is, is that where we have to go?
Yeah, because we've been there before. And so the market obviously didn't react well to that. I mean, we've kind of bled into our topic number 2, but the markets have not done well. What do you think? I mean, we've talked the past few weeks about you seeing some encouraging data that's come through. Do you think this will wipe that out, or do you think maybe it's just a reaction to what happened?
Yeah, I know. I mean, it seems like it's a bit of a reaction to begin with, right? And as we've talked about, how much of this has been built into markets, like it's no surprise that they're increasing interest rates. The big factor is going to be the next couple of inflation numbers that come out and whether or not they're trending in the right direction. If they're trending in the right direction, then I think the market's going to probably be a bit of sigh of relief. We've only really had the one announcement of inflation where it's been lower, and so by any degree, and so that's really what the market's going to cue in on, is whether or not we see that inflation come down and whether or not there's a couple of months of that. And then, no, it's going in the right direction. Yeah, we're good. Those interest rate increases that happened earlier in the year, they're starting to have their impact on the economy. Yeah, we're starting to see inflation continue down. And that's where, we could see that follow through. From a technical standpoint, we still continue to be quite constructive. So a lot of what we see, continues to transpire. Even this week, we saw a lot of different indicators continue to improve. So today, the short term gets damaged for sure. The intermediate term kind of stays where it is, but that will be something that we have to look at into next week.
Good. Okay, so I find this interesting that the cannabis space is heating up. Now, historically, when we're in these moments of very high inflation and with rates rising, with potential recession fears, things like liquor sales do quite well in these times. So is there a correlation, do you think, in what's going on in the general economy and the fact that the cannabis sector is finally having a good day in the markets?
Well, certainly that could be a part of it. If you look at the last earnings, especially with the U.S. companies, the Canadian companies, their earnings weren't as strong, but the U.S. companies, the earnings were fairly strong. The revenue and even the bottom line was pretty consistent. Quarter over quarter, it was in a lot of cases flat or just up a little bit, but year over year, the growth's been phenomenal. And so, yeah, that's exactly what happens is that, when people get a little down on what's happening in the economy or with the markets, they tend to turn to some type of self-medication, and that could be cannabis in this case. I think I think it's more a function of the market itself and how it's changing its behavior, because the cannabis market tends to do well when the market is doing well. It tends to be, because it's a newer industry, it doesn't have a huge institutional following yet. It tends to do well when that kind of, for lack of a better term, like risk on
Right.
feeling is in the market. And we started to really see, cannabis performing here. Most of the cannabis stocks, even with how bad today has been for the markets, most of the cannabis stocks are still up kind of 15 or 20% on the week. So they're still having a great week. If you picked them up a week ago and held them to today, you're still, pretty happy with what's going on. And that's, again, a function of just risk returning into the market. The fact they got so beaten up.
Yeah, I mean, the other thing is that smart money, they approach these things differently, I would imagine. A lot of those companies have they have unbelievable fundamentals, right? And if they've taken a beating, then smart money typically can see that there's value there, right?
Yeah, and I mean, that's as money comes into the market, investors are looking for areas that are cheap. That's kind of the premise of Benjamin Graham investing, is find something that's cheap, that's growing, and you'll do really well with the stock price.
Awesome. I love it. Well, I always love it when that space does well. On that note, we're going to talk about some CSE issuer news, and of course found an issuer doing something really neat in the cannabis space. So I wanted to talk about it. CSE cannabis company called Cannabix Technology. They're working on a breathalyzer for cannabis, and I thought this was super interesting. I want to ask you about the tech space around cannabis, because that's obviously kind of blowing up. But they are in the process of working on THC in breath and blood using proprietary sample collection and analysis hardware in the southern U.S. study. So this breathalyzer, they're working alongside law enforcement to work and create this breathalyzer that will allow them to have better access to testing, because I believe right now the only ability to test is via blood. And so if you're pulling somebody over for driving, obviously you can't test for that. So I think we're probably going to see a lot more of this come to market now that it's recreational in so many jurisdictions. It's something obviously law enforcement will want to have as an availability. But what I wanted, so congratulations to them. I'm excited to see what comes from this, and I hope that that it goes smoothly and comes to market. What are you seeing in the cannabis technology space? Are we starting to see a lot more tech come around the cannabis space?
Well, it has slowed down a little bit of late, just because it's been a challenge to raise money, and most of these startup companies have a high capital requirement. But overall, if we looked at sort of the last 3 years, yeah, you've seen all kinds of different technology come to the market and look for proof of concept and beyond in that space. It's a new space, and it's been illegal up until kind of a very recent past. And so it makes sense that now you're starting to see people work on solutions that can have an impact in whatever the capacity is in the industry. And that will continue here because it is in its infancy. It's not even legal federally in the US or in Europe. So, that's things that will happen in the years to come. And when they do, there's going to be all kinds of technologies, from, breathalyzers to how they develop it to extract and producing products and everything in between.
Yeah, absolutely. Well, congratulations to them. Again, I'll be watching to see how that study goes, and hopefully that can come to market and keep us safe on the roads. What should we think about going into next week, Bruce? I'm sure you're ready to be done for the day and the markets to be over, but what should we think about going into next week?
We just want to see what the follow through is going to be like, right? So, was this a 1-day sell off? Will it continue? And then, what impact does that have on investor psyche and the markets? Like, are we going to retrace everything and go back and test the lows like some people think? Or is this, just kind of blowing off the overbought conditions that we've had, and will a rally resume? So it'll be really interesting, next week to see how the market reacts to all of this.
We'll be watching. Listen, Bruce, enjoy your last weekend of August 2022. I believe we'll be doing a show next week. I'll double check and we'll let our viewers know because it is the long weekend. But hopefully, I will be seeing you next week and we can see what the first week of September looks like in the markets.
That's right. Sounds good. Have a good weekend.
Yeah, you too, Bruce. Thank you.